want to do a little bit of post-mortem on this Cisco paper trade that I had recommended people make earlier in the week. Now, this was a trade around Cisco's earnings, and this trade is specifically a diagonal trade. So that's a time spread as well as a spread of the strikes, in this case, 1 point wide. So why was this trade set up the way it was, and how did it work out? If we come take a look at Cisco, earnings happened here. The next morning, Cisco gapped down, rallied a little bit, and then it's continued to move down since then. Now, I had specifically expected, because of Cisco's run-up, that it might not continue to go much higher. And because of that, I ended up setting up this diagonal with some skew that basically skewed it to the downside. In other words, the way this trade was structured is that if we stayed in this general area up here of 71 to say 74, maybe even up to $75, this trade could have been very nicely profitable. But if Cisco sold off, which if I were to look at the risk on either side, I think there was a higher risk of it selling off than there was of it blasting higher. If it were to sell off, no matter how low it went, this trade would not be a loser. And here we are today on expiration day, the 15th, and that's the expiration of the front strike. I want to be clear on that. And this trade is profitable, minorly profitable, but the trade only had $79 in risk in it to begin with. So that's a nice % return on that amount of risk. So this is a time spread. In a time spread, this one is going to expire today. This one is still live until the 22nd. The P&L diagram is modeling this based on the fact that both of these will get closed today. So in other words, if this one expires, let me just exclude this one out of the picture there. If this one expires, now all of a sudden you've got one direction exposure remaining in this trade, and your loss can be larger than what the modeling showed. So again, the key to any sort of a time spread where these are different time frames is that you need to shut the entire trade down, or at least understand that you do have this remaining long out there, and you need to have a plan for dealing with that, or be prepared to accept the consequences of the market going higher or the market going lower. So just a little bit of an update on time spreads in general in this specific trade as it revolved around Cisco earnings. If you like this sort of content, please subscribe. Give me any comments down below if you would. And if you specifically are interested in knowing about a great trade I've been doing that's been working for up until recently, it had a 97% win rate since I started trading it live about 12 weeks ago now. Check out the link here. But do note that there are some losses that are going to be coming into play on that trade that I'll be sharing next week. Still a very good trade. That win rate is not probably going to be 97% anymore, but it's still going to be a very solid win rate. I trade that trade live in my alert service. If you're wanting to know more about the alert service, I'll put a link here on the screen for you to check that out as well. Take care, everyone.